Welcome. Good evening. Good evening. Good evening. We're gonna go ahead and get started. Hope you're all doing well. Hope your evening is going great. Listen, just wanted to do this tonight real quick because I have a lot of people asking questions about estate taxes. I see so many people talking about generational wealth. So I wanted to kind of come in and address that real quick. Kind of give your mind, get your mind start thinking, because one thing you got to realize is the government is out to collect money. They want to collect money. So if you're not properly set up, all you're doing is building generational taxes. So we want to address that. We want to talk about that. So listen, make sure you share, like, and make a comment. Let me know where you're calling from, where you're in, and then we'll be able to. Good evening. So we could see all that, right? So let's make sure you getting it. If you're on here and you hear me, make sure you let me know. We're streaming live, so it might be some delays as well, but it's all good. Okay. So let's just go in here. I'm just gonna do some real quick, just check some stuff here. So yeah, make sure we're streaming on all platforms. So do me a favor. So let's go ahead and just jump right in because I want to address this and kind of help you, so you kind of get your mind right, start thinking. So the first thing I want to do is let's talk about the history of taxes, right? Because if you don't know the history, then you never understand why it is that the government does what it does. So the first thing I want to show you is let me share my screen, and we're gonna go in here. Let's talk about. Let's go in the. Let me just pull this up real quick. 1 second. Let's share the screen. Boom, boom, boom. Should be able to see my screen in a minute. All right, cool. So we're gonna go in here. Let's pull this guy up. So you can see my screen now. You can see this. So I just did a quick Google check for you, so you could kind of see it. Still real right now. It's 5 million for the people in Maryland. So each state that you're in, check your state and see how much it is. So what does this mean? Somebody was asking me earlier, what does that mean, 5 million? Well, that means this. In the state of Maryland, when you pass away and your total net worth is over $5 million, then you owe some money to the state of Maryland, taxes. Your beneficiaries, whoever is going to be receiving that money, is going to get it. Now here's the other one. The federal is 11.7 million. Now somebody actually asked me and said, well, does that mean it's 16 million? No, it just means your total net worth 11.7. So you're going to pay the federal their part, and you're going to pay the state their part. I mean, your beneficiaries will, because they're the one inheriting the money. And we'll talk about how all this comes about and why is this important for you to be prepared for and plan ahead. I'm going to show you some people that never planned ahead, right? They never planned ahead. And what happened? Well, they had to pay. They had to pay the government because they didn't plan. See, unfortunately for so many people, you're busy getting the money, working hard, doing everything. Now, some of you are, you have your trading in the stock market. Some of you are buying a bunch of real estate. You own tons of properties. All these are tied into with your name. Some of you even have an LLC. Some of you have a S corp, C corp, whatever the case might be. All those things, right? All those things are great, but here's the problem: they're all pass-throughs. So when something happens and you're not properly structured, guess what? Your family members will have to cough out that money. So I'm going to show you a guy he's actually a CPA. They call him the American, this guy right here, this dude. It's called Alwyn C. Ernest. Look at that. American accountant. That's why I always tell folks, just because you have a title CPA behind your name, don't mean they understand taxes. A CPA is a certified public accountant. Now, there's some CPAs that actually take the time to learn taxes, and they understand, they study it, and they take it seriously. But there's some that just push paper. That's all they do, accounting work. That's it, bookkeeping. They have no idea about taxes because that's a totally different animal. Some of them don't take the time to go study it. So let's see what happened. He died, died in 1948. You might like, okay, that's the guy. Let's look at all the people that are in his shoe. So back then, his gross estate was $12.6 million. It's a lot of money. Settlement 7.1, net estate, his family walked away 5.5 million. Percent shrinkage, 56%. That's our boy Alwyn Ernest. Elvis Presley, you've heard of that name, right? Most of you know him, some of you might not. $10 million in gross estate. Paid out the IRS $7 million. His family walked away with $2.7 million. 73% shrinkage. William Bowen, 22 million. The federal government took 10.5 million. 11 net estate, 11.7. See that, folks? Marilyn Monroe, 819,000, 448,370. Nelson Eddy, 472. Gabby Hayes. So my point is this. Now, why is that number so different? Well, because the government have the right to change it. So whenever you have a new president, like right now, today, as we're speaking, there's a bill right now, I guess, Biden, the president, Democratic president, he's thinking about it to lower the federal estate tax threshold from 11 million. Who knows where it's going to lower it to? So what does that mean, folks? Well, what it means is this. If they lower it to, let's just say, 2 million, just using that as an example, and your whole net worth, especially most of you don't even know what your net worth is. If I asked you that question, what's your net worth? You don't know. You should know. You should know what it is. You gotta know. But when something happens, the government will find out for you. All that money you have in your safety deposit box at your bank, all the money in your bank account, everything you own. Remember, they do what they call an estate tax sale. So let's say it dropped to 2 million. They reduced it to $2 million. And you're worth 10 million. Guess what? Your family will have to pay the estate tax on the other $8 million. See, when we say things like all nothing, control everything, there's a reason for that. Because you got to make sure your entities or your assets, your net worth is owned by an entity that does not die, that lives on forever. Understand this, folks. There's a reason why certain things are done. So let's look at something else. Let me show you something else. Let's go to tax history. So in 1913, some of you didn't even know. Do you even know when the taxes was introduced to America? 1913. So in 1913, the government introduced taxes to America. It was supposed to be temporary. So the 16th Amendment to the U.S. Constitution was enacted, the so-called Income Tax Amendment. 3 years later, during the Revenue Act was passed, the infamous death tax, inheritance tax. So let's go here and see something. See the game they play. So in 1913, it was supposed to be temporary. The lowest tax bracket was 1% for the folks that made $20,000. The top rate, 7% for 500,000. Sounds good, it's great. That's the highest tax bracket, right? Well, let's keep looking at that. Look at it. Look at it rise little by little. So whenever they said we're going to tax the rich, right? And you're like, yeah, let's tax the rich. Well, this is the rich, 2 million. They raised it to 15%, but they also raised it on the poor, 2%. Same amount, 20 grand, 2%. Then 5 years later, in 1918, they raised it to 6%, $4,000. The rich, they lowered theirs to $1 million because they could go after more people, 77%. But check this out. Let's fast forward. Look at that stuff. And I'm going to show you a roller coaster ride in a minute. 94% in 1944. So first off, they reduced the income for the poor, but they raised the taxes 23%. 2 grand. There's a lot more people in that threshold. 94%, 200,000. This is the so-called rich. $200,000. So if threshold highest bracket 94%, that's what they paid, and that did that for 2 years straight. 1944, 1945. Then it dropped to, in 1946, it went down a little bit, in 86%, still high. The income stays the same. The income didn't change. They lowered it a little bit, but look at that, folks. So let me show you something else. Let's come here. All right, so now, have you seen this before? Have your financial advisor ever showed you something like this? Yeah? Let me know. Let me know. Because this is what happens. So a lot of you are putting money in qualified accounts. And let me just say something real quick on that. This year is the final year for those of you that make over $450,000 income, W-2 income. If you have a lot of money in your traditional IRA, if you don't convert it now to a Roth IRA, you're not going to have an opportunity to do it again. Now, let me say this. We have a program that we can do, and you could get a very, 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 very attractive tax benefit when you do the conversion. So make sure you go to buildwealthwithdouglas.com, sign up, just register, pay your fee, because that's all it is. And we'll work with you on that. We'll show you some stuff that's going to help you now and restructure certain things for you before the end of the year. You need to make sense. You need to jump on that. Take advantage of that. All right. But let me show you something. So what is the reason why they raise taxes? Well, the first one back in the day was during World War I. That's when they raised the taxes to 77% if you make over $1 million. Then right here, World War II. That's when they raised it to 94%. Remember that? And lowered the income. So they have different reasons to raise taxes. Like right now, today, we don't even know what the reason is, but there's tons of reasons why they should raise taxes. And you already know they're working on that hard. There's tons of, they want to raise taxes. They're looking at, you got to think about all the stimulus checks that was paid out because of COVID, right? Somebody got to pay that. How did the government make money? OPM, all the people's money, stimulus check. They're going to hit that. All those people that collected that money. Unemployment check, they're paying all these monies out, right? All these monies, they got to recover all this. So who are they going to come after? Well, let's look at the person. Let's say you have $1 million in your retirement account, which is what they're looking at that stuff, that your retirement account. And they say, well, today we're going to raise the tax on the rich. And you think they're talking about Trump and Warren Buffett and all these people. No, they're not talking about those guys. They're talking about you. Because remember, those guys don't contribute to 401k. You think Trump is putting money in a 401k plan? Okay. Keep thinking that. 37%. That means the IRS will get $370,000. $370,000. Thank you. Appreciate that, my friend. Appreciate that. 370,000. You walk away 630,000. Now, that's for a person that has $1 million. Now, here's something else. After they hit you with that tax, right? After they take, imagine this, right? You just paid this at retirement, and you walk away with this, right? But yet you go to the grocery store, you get taxed again. You go buy food, clothing, you go to a restaurant, you get taxed again. Before you know it, this 630,000 is gone, is dwindled down. Why don't they give you a break on taxes at retirement? You all are busy fighting each other over COVID and vaccine and not this and not vaccinated, instead of focusing on the main thing, which is taxes. Folks are fighting each other, getting divided, families hating one another because somebody didn't get the vaccine and somebody got the vaccine, or whatever the case might be. Instead of saying, you know what is going on with this government? Why am I paying all this money in taxes? Right? Why am I paying all this money in taxes? We're not talking about that. We're not even going into all that, right? We're not even saying all those things. Why am I being taxed at retirement? That's even far-fetched. That's like retirement money, right? Because remember, think about that for a minute. You pay taxes on your paycheck, and then they already took out the money from the tax from your paycheck. Then you go to the grocery store, you still got to pay taxes again from that paycheck money that they just took taxes from. All right, folks, listen. At the end of the day, when you know better, you do better. So for everyone that's getting money right now, you're making money. There's so much money on the streets right now. Even the banks are loaning money out to people. So much money. A lot of people are getting paid. Some people are not. Some people are getting paid. Some people are jumping into different, opportunities, looking to make money. That's okay. Those of you that, and I'm talking to the folks that are getting paid, that are making the money. Structure yourself. Structure yourself. Get yourself set up properly. Get yourself set up properly so that you don't leave generational taxes. So go to buildwealthwithdouglas.com. You go on that website, buildwealthwithdouglas.com, and just sign up, pay your fee, so I could help you. So you're not one of those people that we just showed. And if your CPA is open-minded and willing to learn, I could connect them with my CPAs and stuff like that. Because I have a bunch of CPAs that are, that are very vast in the knowledge of taxes, that know what it is they're doing. And then we'll talk. All right? So do yourself and your family a favor. Because there's so many people, they don't even, and I know you might jump around. Oh yeah, I saw this video and somebody said I should get myself structured, and you go do, set up a trust or something like that, right? Well, there's over 80 different types of trusts in the world. There's over 80 different types. Some trusts only protect you from probate, avoid probate. That's all it is. And some are what we call asset protection. So that's a different conversation. And take advantage of the opportunity to do certain things that you need to do. But with that, folks, listen, I just wanted to jump on here real quick, educate you real quick, and help you start thinking and planning for your financial future for those folks that the loved ones that you care about, so they can do better, so they're not left with a whole lot of money being paid to the government, because the government is collecting now, they're going to collect later. All they're doing is just watching, just sitting back and relaxing and taking and counting. It's all right, this guy, he's on there. And another thing I want to sell to all my young bloods that are on the internet showing off all your wealth, they're seeing it too. Privacy is the key, my brothers and my sisters. Privacy. Understand it. With that, see you at the top. Let's keep making it work, keep getting it, and go win. Go win. We want you to win. See ya. Bye-bye.